Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, December 3rd, 2019. I wanted to get a video out well in advance of the close, just share my thoughts, and what we'll do is cover both the equity markets and a couple other things. There's been quite a bit of buzz in the trading room about the gold stocks, so I'll hit on that, gold and GDX, a couple of the miners. Somebody asked about treasury bonds. There's a lot out there. Maybe I'll make a comment on natural gas. Big move today, although again, I mentioned that yesterday. There wasn't much in the charts, so it wasn't really, at least not by my trading style, anything I see technically induced. It was probably a news-driven event. Then again, maybe there's something in the charts I just didn't see. My trading style isn't the be-all end-all. I just look at things in a different lens, a different perspective than maybe some other traders. And so again, let's not even spend much time on it because it wasn't much of an actionable trade other than a trendline break that occurred today. Before we get to all those other things, we'll start out with the broad market. And here's the QQQ. So I honed this in. I sharpened this up. The line here, came in exactly a measured target, the flagpole, the move leading down, and that's what I did. I replicated that line and added it right there, and you can see a perfect hit. So that one goes down for the textbooks right there. That's a textbook example of a bear flag pattern. And as I said yesterday, the futures gave us the insight, as well as watching the QQQ and pre-market, as I showed you today earlier in the chart, this morning, this first one here. Where was it? Maybe that was I thought I had it in this one. And maybe it was in the second post today. Oh no, that was it. Yeah, there it is. First chart. Okay, jumped right over it. There was this shaded area right here, where it's shaded white. That's pre-market session. So right here, where the little pointy finger is, that's where we closed yesterday. So futures traded throughout the night. Then QQQ opened in pre-market today within the flag. So it was still, even if you're not a futures trader, you could have watched the pre-market session, and boom, there was that impulsive candle here. Let me zoom in a little bit. And so that was that. And again, this was pre-market trades right there. And then by the time we opened right here, you can see we gapped down, and there it is. Boom. So there was a big slide in pre-market, that opened right here. And as I said yesterday, nothing's more impulsive than a gap down. So again, don't be mistaken, since you don't see red candles like you do right here, that you didn't have an impulsive move. Nothing's more impulsive than a gap. It's the ultimate impulsive move, because what it does, it traps longs. Longs that might say, okay, well, big down yesterday, so I'm just going to set my stops below that recent low, buy the dip, and everything will be fine. Well, that's what the market tends to do, and it also denies shorts an objective or an optimal entry, I should say, and of course, or an objective entry. So anyways, that was that, and we had a momentum fueled overshoot, as I said, hit that 199.80 target. That's where we've had the first line breaks. These line breaks are where you expect a reaction. Sometimes I'll draw out the zigs and zags, along the way, like this, down, reaction, down there, but that's where we're at so far. Now let's focus on where we go from here. That's the important thing. That was this morning. That showed the big down, the breakdown of the bear flag in NQ. And again, let's get to the current charts. I've already posted these today. You guys saw that stuff. All right, so I said I favored a bounce. If you're an active trader, I favored a bounce, following a brief momentum overshoot up here at about that 263 target. We could go higher, but that's where I reversed back again to short. I'm an active trader. Covered shorts, went long, and then reversed it here just recently, although I'm using NQ. So here's what I'm telling you. I think this is where the bounce ends. Why? It's been a buy the dip market, and maybe I'm proven wrong. I'll tell you, there's been plenty of times here we had little pullbacks and they bought. This one's different. This is different for all the reasons I cited lately. The big, the impulsive move down, the bearish crossovers on the daily PPO charts, the breakdown back test, XLK breaking down, things that I wanted to see before. And you can see when you look at the daily chart here, that 236 is pretty much support right there. We overshot it on that momentum fueled overshoot open, but we're hugging it right now. So they're not stepping in and aggressively buying the dip. And I imagine there are probably a lot of traders looking for a gap backfill. It's possible. Hey, anything's possible. We can shoot on up, but I don't think it's going to be that easy. I think what happens when the market gets really extended, and this is again from my experience, and you have lopsided bullishness, bears and shorts capitulating, giving up, you usually get these pretty impulsive moves that don't let you out if you're long and don't let you in if you're short. So where I'm going with that is I favor the low end of the bounce range, and again, that's where I think we go from here. Next stop, when I look at this daily chart on QQQ, and I should have said this in the beginning of the video, you have to define your trading style. Whether you're an active trader and comfortable with going with shorting, number one, and then reversing long to short and then getting back out. That's more of a day trade thing. And anybody that covered at around the lows today in reverse for the bounce and plan to get back in. Whereas swing traders, look, we have really just another check mark today. We have more impulsive selling on QQQ. The things such as the bearish PPO crossover recently, remember I talked about that. Right here, you have these hill right here, if you will, these green hills where the trend is bullish, and then you get the bearish crossovers, and again, covered in recent weeks. I don't want to spend too much time there, but that's where the biggest corrections of the year all came from after that. So, like I said, just additional evidence mounting, and that we may get a more than just what we've had so far. What is this today? Last couple of days off the highs, we're only down about 3.7%. And certainly my minimum targets, and this will tell where the market goes. Let's not make any mistakes about it. The overall trend's still bullish. Like I said, the case can be made that we're going to have more downside from here, but let's see what happens. And the takeaway is how to trade it. If you're swinging it short, if you shorted yesterday, let's say on the drop or the bear fight, or you came in and you could have shorted anywhere. There's a infinite number of possibilities, and of course where your stop is in your price targets, that's going to be different from everybody else. But right now I would just say this: if they took back that flag, that would be pretty darn bullish. I'm going to put a line right there, and if they do that, then there's a good chance I'll run up to new highs. Let's say about 203.68. I can see some resistance reaction high here, some levels there. Otherwise, like I said, I think the bounce will be shallow. I think there's enough evidence that's been building in the charts that we're going to get another move down. And I also think it's going to be pretty impulsive. I think I stated that recently, that when we get that, you probably see some impulsive selling. That's what tends to come after these periods of very low volatility. Remember, the VIX has started to really move up. Where's the VIX? VIX dash. I have to put the dash in there on TC2000 after VIX. And that's it, coming up to this downtrend line resistance. But look, this is again indicative of these other moves. Now, the million-dollar question is, well, so far we've had a little pullback. Is it going to be similar to these, and then you can of course go back to these points in time and see how much the market fell? Or is it maybe the start of something more? Only time is going to tell. And so back to, let me just give you trading tips. If you're swing trading, how to play it. Well, if you want to hold out for larger gains potentially, like I said, I still think at some point within the next next year or so, this market will likely drop from the highs, probably 30% in QQQ 20. That's my belief. Whether we go higher before then or not, that's yet to be seen. So if you want to hit the triple or home run or even a grand slam, and the top is only going to become apparent to most in hindsight, well after it's in. And the only other thing I'll say to that, and then we'll get off this and we'll just can focus back on the charts. The one thing I promise you is that news ebbs and flows with the charts, with the technicals, and don't ever underestimate how quick sentiment as well as the headlines as far as the economic data and all that can turn. Now the tide has been bullish lately. We've seen some strong economic reports. We've seen a resilient market, and so again, this may be over and that's it. And we next week we're talking about where the next resistance levels come in. The thing about market making all-time highs, there's really no resistance once you take out those previous highs, and there's no resistance overhead, so we can't really identify any levels to objectively short off of. All we can do at that point, if you want pullback trades, is look for breakdowns of support along the way. And what's nice is this market's been stair-stepping higher, so if and when it does fall, we have a lot of levels like today that you can reverse off of for an active trader and go long. All right, enough of that. I just wanted to say that I think there's more downside, and I maintain the same targets I've maintained here for the last few weeks. This target zone here, QQQ, about 194.39 to 195.68 roughly. Favoring the bottom of that zone, really, if you want to know now. I think if we get down to the top, we'll probably hit the bottom as well. That might be a very good place to cycle in long for a swing trade and cover shorts. So that's sort of my preference. But when I say that, too, remember I'm an active trader. I'll micromanage a trade. I'll swing trade down if we get that. But along the way, I might you might be confused if in the trading room or even on the homepage, I talk about reversing a trade for a quick bounce like this, like we had today. So there it is, and we bounced right back to that 2063 target. And let me give you NQ. NQ, I believe earlier today on the homepage, I posted a bounce back to about 82.30, and again that's where I reversed. That's where I wanted to get back short again for maybe another leg down. A member on the site on the homepage pointed out, it looks like another bear flag. And that may be the case. They're not very common, but I have seen it before where you have consecutive bull flags or bear flags. In this case, we had this move down the futures. There's a bear flag, another impulsive leg down. I have seen that happen and play out all the way. More often than not, you don't get that. But let's be open to the possibilities, and basically all you have to do is just watch what happens. We have a little uptrend line, probably shows better on a shorter term time frame. Let's look at QQQ. Here it is. We can look at it like this if you're a QQQ trader, and do this right here, and that would be your bottom of that level. In fact, I posted a setup in the trading room. Let me show you that. Okay, trading room. I clicked on my Gravatar. It sorts all posts by my what I posted today. And it's got to be down here somewhere. There's a lot of buzz on the gold stocks. That's why. If I don't get to those in this video, I'll wrap this one up, keep it to the broad markets, and we'll do it in another video. Oh, here we go. All right, right here. And this is just I posted in the day trading group. ES and NQ could run on a break above these ascending triangle patterns on these 1-minute charts. And although a downside break could also spark another wave of selling, I favor the latter, meaning an upside break, with the same 82.40 target posted earlier today. Either way, one could go long for a day trade with stops not too far below. Let's see how those look. These are 1-minute charts, and that's how it looks. So there's ES. You can see nice, clean. This is what we call an ascending triangle pattern, and a pop up there. There's that 82.40. That's all I was really looking for. Although, like I said, you can trail stops up. There's a lot of ways to trade this, and maybe we keep going up from there. So that was what was that? Screenshotted earlier today at 1 o'clock Eastern time, a little after that. And as of now, let me show you that. Let's pause it. This is a little bit tricky. I'm going to have to drag the screen capture software down here. This is that same chart. I had added those lines in with screen draw tool. Let's do that, and you can see that's exactly what happened. So it was a nice little day trade op right up there. You see 82.40 right here, that dotted line? Perfect hit of that level right there. Boom. And that was the ascending triangle pattern. And now, so what's happened is two things. So we hit my shallow target, quick day trade, get in, get out. Of course, some of you might have taken it down here. That's where I reversed. But that gave you another, NQ. That's a decent little move for a day trade, of course. And then we broke the trend line. So there's your sell signal, also a stop. If you were trailing it up, that's a logical stop below this uptrend line. And you can see here's ES right next to it. That's the same chart I posted before. And you can see it broke out too, provide a little trade up to that 30.90, which was that first stop, that first arrow point I had. And so this is where I think we go lower now for the rest of the day, and that's why I want to get the video out to you guys. And okay, and again, how do you trade that depending on where you're at? Well, if you're day trading, swing trading, it all depends on your time frame. A swing trader is going to have a higher stop. You probably want to be above that bear flag, especially if that's where you shorted yesterday. So it all depends, but that's the way I'm leaning right now. And now an active trader could have a stop right above that reaction high, or maybe even this reaction high. The trend line should not be taken back, nor that previous reaction high right there. Okay, and here's ES for you S&P 500 futures traders. There's that 3076-ish target that I had. That was the first arrow break, brief momentum fueled overshoot. And again, maybe a potential bear flag right here, double flags. The flags got a little sloppy on the futures, but they turned out to be very clean on SPY and QQQ because this is that overnight futures trading. But either way, they played out pretty well. Let me show you SPY for you SPY traders, SPY. There's a 1 minute chart right here that we're looking at on SPY. And that's that same, this would be that symmetrical triangle I posted in the trading room on ES and NQ, or ascending triangle. There's that little pop. Again, for minor trade, and we zoom in tight, and you can see now we've broken that trend line. And so this is what I favor. Now if we get this, we take out the lows, I think then there's more, I will put a very good chance there's more downside this week, and maybe even in the next week, and possibly beyond. Otherwise, if they step in and start buying this thing up, you had obviously a backfill of the gap. That's always a logical area for the sellers to step in and for a rally to stop. So anything much above that, and this would be the flag right here in SPY, anything much above that would be quite bullish. It would show a voracious bid right now, and could trump some of those technicals, those the bearish crossovers, other things we had on the daily time frame. It's not my preferred scenario, but you got to look at all options. The trend has been strong recently, so really right up about here is where the bearish case starts to really fizzle out at that point. 60-minute chart, SPY, there's the bear flag right there. There's your flag pole right there, that identical line. I just duplicated it, add it to the highest point of the flag, and look at that right there, the highest point within there. Almost a perfect move down right there to the, well, I'm sorry. That was the measured target of the pattern, and I had this 307.27 on the recent 60-minute charts of SPY. So that was the support level I had there with an arrow break. That level was hit, gave you a little bounce, and again, that's what I'm looking for. More move down, and again, a lot of this all goes into the daily chart. What I'm looking at there goes into things such as XLK, the tech stocks, goes into the VIX, what I just showed you on the VIX. Here's XLK, has broken that BOD, or benefit of the doubt trend line. Bearish PPO crossover, pretty bearish looking chart. So again, it's, they've kind of, I don't say they burned through divergences, but so far this year, the divergences in XLK, they've led to relatively minor drops, 12%, 9%, and of course, we didn't have the next divergence until after we took out that high. And so if I take here this divergence line, that's it. We've been extending the divergence. It's extending, and boom, now we have, some pretty decent sell signals. I'll just say that. The best we've seen in a while. And again, the case builds. So if XLK comes back in, well, let's not even get there. I don't really wanted to focus on the markets. I need to put a level right about here. This would be a breakout, a back test of the breakout level. So that would also align with my minimum target on the indexes, and that's about $83 or so on XLK. Anything much more than that, allow for a little breakdown, would show a failed breakout, and that could be very bearish. And so just like I'm looking for maybe another impulsive wave of selling this week, maybe tomorrow, maybe later today, this afternoon, we'll see. What I would try to impress upon you to consider is don't underestimate. Don't fall into that feeling of complacency, the bulletproof market, everybody being bullish, everyone saying the recession fears are over. Maybe they are for the time being, but I've done this long enough to know that from these periods of extreme low volatility, complacentness, comes the big moves. So be ready for everything that's out there. If you're long, in other words, don't become complacent on your stops. If we break that, go down through 8,300, we could just keep, or $83, we could just keep going. It's all very possible. And this is also a headline-driven market. Today, obviously, Trump had said something, saying, I think I just glanced at headlines, maybe kicking back any trade deal for another year or so. I don't even bother reading it anymore, to be honest with you. I'll just trade the charts. If you try to trade around or anticipate what they're going to say, what the next tweet is going to be, you're going to be spinning your wheels. Yeah, I think we're going to be best off keeping this video limited to the markets. major indexes, and then I'll follow up, since there was a lot of interest in gold and the mining stocks and treasury bonds. I'll follow up in another video, maybe highlighting those, lumping those together. They're both the risk-off assets. And look, plain and simple, if I'm correct and there's going to be more downside coming, then you'll probably see more upside in treasury bonds and gold. They're going to catch a rally if the stock market drops. And if not, we've already hit some of what I call my, pretty much my minimum pullback targets have essentially been hit right now. This is RTY. These are the small cap futures. Beautiful, just a beautiful little bear flag. The impulsive leg down, consolidation, and equally impulsive, and almost a perfect mirror of that initial leg down. We're a little shy of that target here. I had 1584 at the top of that support zone target range right there. We're a little shy of that now. If they bid it up and the market does this, then it just shows you that there's an aggressive bid beneath the market, strong demand for stocks, no matter what's going on in the headlines. But should they take it down and then undercut that level, you're going to have your next sell signal on a break of the bottom of that trading range. I have the number at 1579.88, so we'll call that, you can round it up, 1580. You want to see a solid break below there, and then you can see some of the other levels, and I could very well see RTY coming back here. Now, if that happens, and it may or may not, would have longer term bearish implications, because here's that breakout in IWM. I had the level, and again, this is not a hard line at 159.41. It's just where I had it drawn. So call it about 160 down to 159. And again, if you haven't caught my analysis recently, what I'm referring to is this trading range we've been in pretty much most of the year now, almost since January, right there. So we had a breakout, just like we did back here. Right as of now, technically it's a failed breakout because we're back below, but not by much. As I've talked about before, it is not uncommon to see when a stock or an index breaks out, to see it break out, come back in, and maybe slightly undercut the previous highs. But the lower we go from here, especially with a big red impulsive candle, a candle that's not recovered by the end of the close, and a solid red close, and especially below these recent lows, that would be a failed breakout, and that would most likely open the door for another move back down to the bottom of this range. And if that happens, keep in mind this range right here is getting very long in the tooth. It's been almost all year now. We're in December. This range started back in early January when we entered it. Sooner or later, it's going to break one way or the other. As of now, I wish I could tell you with the highest degree of confidence it's going to go to the downside. I'm leaning that way. I talked a couple weeks ago about maybe going long IWM. I'm going to pull back here on a back test after it had broken out, because I suspected that breakout would fail. I'm not doing that yet. I may, and I'll communicate my thoughts if I think it's worthwhile. And look, and if you believe the market is headed higher through the end of the year, we're going to have a Santa rally higher into next year, I can tell you right now it's an objective time. You had a breakout, back test, have stops somewhat below. It depends how high you think it's going. You can have a relatively tight stop if you're just trying to swing trade and keep your losses small. But if you think IWM is going to new highs and beyond, then why not put a stop somewhere here, maybe around that. You can see 154.65. It was a former support level back here, or maybe somewhere around the bottom, midpoint of the trading range. I would not allow IWM, if I was long, to go all the way to the bottom of the range. If that happens, it's going to do some pretty nasty technical damage to the charts, and I think would probably break below the range. IWM, that's the weekly chart here. All right, I'm going to wrap it up right now, and you can see this same trading range on a weekly time frame, and you can see it really wasn't a convincing breakout on the weekly chart. We had that intra-week breakout last week, but as I told you, the week of Thanksgiving, one reason that I don't trade much during that week, and when I do, if I'm around, I'm very skeptical of any breakouts, because as I said, the rate of failure on breakouts goes up substantially on a holiday week like Thanksgiving, where you have, Friday is an abbreviated trading session, markets are closed Thursday, and nobody's even around Wednesday or Friday. So it's really a non-week, if you will, and those are the ones that you might see some nice looking breakouts. Some may stick, but again, the odds aren't that good of those breakouts sticking. So and you can see that's what happened here with IWM, right back down. So that's that, and let me get this video out to you guys, and I'll do a market wrap at the end of the day. especially if anything's changed on the markets, and I'll try to get to gold, the risk-off assets, other questions on within the trading room as well as the front page. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.